really, especially as we draw to the close of the year and corporate demand begins to wane and dollar inflows, especially from the diaspora Kenyans living the diaspora increases towards the end of the year for the festive season. I think we may see the shilling actually pass go below the 80 level again towards the end of the year.
Below 80, I mean, you're talking about when you say below 80, we're looking at around 79, or we're looking at 78 to the US dollar?
I think we're looking at levels of about 79. It would be a bit hard for it to go all the way down to 78, but yes, usually it will move around levels of 79.
It's interesting because the central bank says that it's not trying to intervene in the market, but rather replenish the likes of its foreign reserves. Your view on that, because it seems that most investors are getting relatively concerned with the fact that the shilling has been stuck in a very tight range over the past year.
I think to some extent it actually is true. The central bank has been trying to shore up its FX reserves because it's supposed to be holding about 4 months cover. Presently it's at about 3.4 months cover. In fact, they're actually negotiating with the IMF to bolster their FX cover. They are negotiating for about 40 billion Kenya shillings. That's roughly about $567 million.
It is quite interesting. We had some economic data out earlier this week. In August, foreign exchange reserves rose $3.94 billion, or 4 months of import cover. And that was basically what you were alluding to, as you also mentioned, that they are busy negotiating a possible loan with the IMF, again, to shore up their reserves. Do you think this is the right time to do that, given the fact that we have seen a significant increase in forex reserves so far this year?
Yes, I think, okay, of course, it will be becoming, they're actually looking at a 3-year program, not all at once. So I think it's a good time to start negotiating this because the FX cover has been between, let's say, 4 months and 3.5 months cover over the last 1 year.
Let's touch on the fact that we've also seen interesting flows between equity markets and bonds. Of course, it remains to be seen whether we will see some of the bulls stay in the market as we head towards the end of the year. The NSE 20 very close to 4,600 points. Do you see any money moving from the equity market into the bond market and vice versa?
Not really. I think most of the investors who are moving from the fixed income market as the returns on the fixed income securities declined have already done that for the year. So, okay, of course, as we draw to the close of the year, activity on the Nairobi Stock Exchange does decline as people sell off for the festive season. But I don't think it would necessarily affect the bond market at this time, because traditionally the people who move from the fixed income market to the equity market are fund managers, and most of them had done that by the third quarter. And we're also seeing the rates have been moving up, albeit marginally. So we could see some fund managers actually coming back to the fixed income market as the returns improve.
Of course, investors are searching for yield right now. That said, central bank looking to auction off that 5-year paper, that coming to the market relatively soon. What kind of rates are the market expecting?
Currently, the 5-year paper is trading at levels of about 5%, 5 to 5.5%. Going by what we've seen over the last 2 quarters, where bids have been coming in at 100, 150 basis points above market. Most market at the moment is looking at levels of between 5.5 to 6.5%.
Just also touching on Safaricom's second tranche bond, that's coming onto the market next week. We know that many investors are expecting for there to be quite a good uptake. Is this going to, of course, happen in line with expectations? We've had really good results out of Safaricom. Your view?
Yes, I actually do think there'll be a good uptake of this paper. They're looking at a 5-year paper at a yield of about 8.5%. Which is, 350 basis points above what is currently offered by government papers. And we have seen fund managers are very active in corporate bonds. So, and 5 billion is a small amount of money. So we expect a really good uptick. I mean, the last bond showed an oversubscription of about 100%. And with the oversubscriptions we've been seeing with government bonds of between 50 to 80%, for a corporate 5-year bond, offering 8.5%, I expect the uptick will be there'll be a major oversubscription on that paper.